Hello guys and girls, and welcome to season 3 of Quick Tips. I am so excited to be bringing you this season, as there's going to be tons of value, and I know this is going to drastically improve everybody's results. It's going to help with entries, help with refining that process, helping with management, helping with scaling into the market, and more so, opportunities that you didn't even know were visible. Now, I'm really excited to get into this particular episode as we learn how to utilize the 15-minute chart. Now, you guys and girls know that I'm a big fan of refining those entries and just getting into these charts with precision and making sure that we're very, very precise. Now, I've been testing this data and trading this actively and back testing this for over a year now. And what I've personally experienced and seen is just mind-blowing. So I cannot wait to dig into this episode. So I hope you're ready to take notes and really watch this over and over again and make sure this sinks in, because we do have to take things with caution when we're trading the lower time frames. I honestly believe that this is the evolution of the Falcon strategy, and this is that 1% tweak that is going to drastically improve those entries, and of course your ability to scale in management and these extra positions that you just didn't realize that were there, and these probabilities that are sometimes not visible on the 1 hour chart. It's just really going to iron out any kinks and improve your overall performance. Now, before we get started, of course, it's very important to realize that we're looking at these entries on the 15-minute chart in a particular phase. So we know that we have the impulsive phase and we have the corrective phase. Where I'm looking for these entries are mainly on the impulsive phase. It's not that the corrective phase, that it doesn't work or anything like that. There will be entries there, but it's less effective. And I think that if you're going to focus on the corrective phase, it's just going to end up in confusion. So I highly recommend that when you're utilizing the 15-minute chart, you're focusing on the impulsive phase. Now, naturally, when we're going to the lower time frame, it's easy to get excited and kind of jump to the 15-minute and look for entries. That's not how we're going to do this. Remember, always focusing on the higher time frame structure to support that. That's going to be our main focus. We're going to focus on using the 15-minute chart in the impulsive phase rather than the corrective phase, so we can keep things simple. There's clarity and it's just black and white. So guys and girls, let's firstly take a look at our first example on dollar CAD. We're going to start off by understanding how and why we would identify that particular phase. So let's take a look. So let's firstly take a look at dollar CAD. So here we have dollar CAD on the daily chart here, and we have the bigger structure. So notice how we have impulse, correction, impulse, correction. So we know that these two particular parts are the corrective phase. They're the bigger corrections. Now within, of course, corrections, we have impulses, we have corrections. And it's important to understand that where you're really going to take advantage of the 15-minute chart is in the impulsive phase. So essentially anticipating moves like this to the downside, anticipating this move to the downside. We know this is very, very corrective. So naturally the move on the way to the downside is going to be very, very impulsive. And through testing and through trial and error, we've noticed that on the 15-minute chart in the impulsive phase is just so much more effective. And it's crazy the power of the 15-minute chart and what it can do to your entries. Now, an example of where I wouldn't look at the 15-minute chart would be this. So notice how this area here, when you're halfway in, you can see this is just very corrective. Would I look for entries within this area here? Definitely not. It doesn't mean that there won't be any. It's just that this is quite corrective. So it's very easy for you to be, tagged in, tagged out on the 15-minute chart and just end up in more confusion and frustration. So when you're looking at it, use this as an example when you're back testing and you're looking at other positions, that this is the corrective phase. This is really where you don't want to be utilizing the 15-minute chart as much. And then you want to be focusing mainly on the impulsive phase where you catch those particular moves. So nice and simple, focus on the impulsive phase and forget about the corrective phase for now. Now, the main uses of the 15-minute chart is, of course, timing entry points, so it's just much more precise, scaling in more precisely and more frequently, and also filtering the 1 hour chart if it's just not clear. So sometimes on the 1 hour chart, it's not always clear what you want to see. It can be confusing, and then you may not capitalize on the trade. The 15-minute chart is going to help you with that. Management. So naturally, when you take trades, sometimes when you move to break even, it pulls back, takes you out for break even, and then goes in the direction that you expected. Now, by filtering out your entries, it makes your management better as a side effect. So naturally, you're going to see an example that I'll show you. By having that better entry on the 15-minute chart with precision, you'll then stay in the trade. So it gives you more of a cushion. Last one, of course, is the extra entry. So this is where, in the impulsive phase, a lot of people, they wouldn't see the entry because it hasn't really formed much on the 1 hour chart. And this is what I started testing and trading over a year ago. And I've just seen a crazy amount of growth added to my own portfolio. And I'm now going into this with a full 1% risk. So what I was doing is trading it on Tesla Capital. But now in the new year, I'm going to be trading this with full 1% capital. Adding that to our entries, I think would just be a game changer. It's going to accelerate aggressively people's results. So I promise you, this is going to be really beneficial for you. But at the same time, I want you to approach it with precautions. So what are those precautions? Well, what I highly recommend before you start jumping into it, of course, is backtest at least 3 months of data, utilizing the time frame before you implement it. Naturally, you want to be on the safe side, and I want you guys and girls to actually put in the work first so you really appreciate and understand why I'm speaking about the impulsive phase rather than the corrective phase. Next part, what I would like you to do is test your first 3 to 5 positions, either on a demo account or just a reduced amount of capital. So let's say, for example, you don't want to go to the demo account, which is fine. Just do it on Tesla Capital. So you can, let's say, risk 1/4% or 1/10% before you start risking the full 1%. Once you get confident and you're consistent with it, and that you see that it's going to benefit you, and you're very comfortable and you can trade it exactly how you're trading the 1 hour chart, then add it to the full 1%. If you're brand new to Falcon and you feel the need to go to the 15-minute chart, I would highly recommend staying away from it just now. You want to be in Falcon for at least 3 months, really understand how we look at the markets, the structure, the price patterns, and go through the content before you start jumping to the 15-minute chart. That can come after. The 1 hour chart alone has shown us what's possible within itself, and we can still trade the 1 hour chart on its own. This time frame is a beauty to trade on when you're trading the 1 hour chart. I've done it for years and years and years, but the 15-minute chart now is the evolution of that. But it's how we look at the 15-minute chart, the unique way that we're going to tackle it in Falcon, which is what is going to be the game changer for us. So I'm really, really excited. And always pay close attention to the 1 hour chart and the higher time frames when you're taking these positions on the 15. Forecast all the potential candle closes, the structures, the confirmations, to always solidify that entry point in your understanding where the price is possible to go and where it's probable to go. And the last precaution is minimum of a 15 pip stop loss. So I don't want anybody going any tighter than 15 pips. Naturally, of course, I can't control whether you have a 5 pip, 10 pip stop, but what I would highly recommend, guys and girls, you don't need to be going any lower than 15 pips of a stop. You can achieve some incredible risk reward at 15 pips, and then there's going to be certain types of situations on the chart, risk entry positions, where you'll literally be able to get in with a 15 pip stop, and you'll notice that your risk to reward is pretty much doubled from what you previously would have done on the 1 hour. You've just been more precise with it. So I'm really excited to get into it. Guys and girls, I highly recommend that you've got a pen and paper so you can take some notes and watch this episode a few times before you start implementing it as well. So as we go into the charts, it's important when we're utilizing the 15-minute chart, we have a checklist. So the checklist for the 15-minute chart as follows: impulsive phase. Number 2, high time frame structure supporting the move. Number 3, a minimum of 6 15-minute candles before placing the order. And number 4, as early on in the impulsive move as possible. So these are the main 4 checklists that you want before taking the trade. That's going to give you clarity, and it's going to keep it very, very simple when taking these trades. So guys and girls, let's dig into some examples, and I highly recommend that you take as many notes as possible so you can really learn how to utilize this. So here firstly we have USD CAD, and looking at the bigger structure, it's only natural that we're looking for sell setups. So again, utilizing the high time frame structure, understanding that we're looking for the impulsive leg now, because this is all corrective. Now within these areas, we understand that we could go a little bit higher or we could drop at any point. So always be in the mind frame that when we're taking the sell setup from the top, it could be a very, very big trade. And of course, we're now starting to get that momentum that we've expected for months and months. So the naturally top of structure trades, we've got the checklist. As we work our way down, let's go to the 1 hour first, and let's see what we have. So when we're working our way down, we know that this is just one big corrective pattern, and essentially this can drop from any of these areas, right? So we've got that correction, just one big ascending channel. It starts to break, forms a different variation. Now, we know that there's a few points that we can look at here, because some people might have a trend line here, some people might have a trend line here, and some people might have a trend line back from here. Which one is right, which one is wrong? None of them, because the truth is, it's more to do with that this is a corrective move all the way to the top of the structure, and the bigger high time frame structure is supporting this to come to the downside. So at any point, we want to be looking for sell setups, because we've been anticipating and forecasting this for months. What I was looking at was this. So we've got this type of structure here. We can see that eventually this will start to fall off. We have this flat channel here, and at the top we have the multiple rejections, and we also have these scoops, these arcing formations within here. Now, when you go down to the 15-minute chart, it's important to understand that the majority of the moves start to happen after we get the first impulses or just before. And that's where we can start to see extra entries and refiner entries. So from the 1 hour chart, you can see that we have entry point at the top here on the triple top, impulse down, would have taken you out for break even when you come back up. Then we had the extra entry here. On this one, if you moved it to break even, then it may have come back down to come back up to take you out for break even. But then we had an extra entry. Now at this point here with this ascending channel, you might think, well, how do I enter that? Well, the extra entry really comes on the 15-minute chart. So if we drop to the 15 minutes, you can then start to see things a lot clearer. So on the 15-minute chart, it now gives you a very obvious arc. And you can see this from this formation here. We have this ascending channel. So this is the one that's not really visible on the 1 hour chart as much. And you have this little arc, this double top, impulse correction. We know the bigger structure is pointing to the downside, so it's worth the risk taking these type of trades. What does that do for us? We're able to get in tightly, precisely, 20 pip stop just above, and then even to the bottom of that structure is 3.2%. And then, of course, we have to the downside where we'd be running now for 13%. So that's just the one position. So essentially, you could argue that some people capitalized on this trade to the downside. Some people only took break evens and didn't get any of this move. And this precision is what is going to help you. It's going to be a game changer. So first position there, as you can see there on the 15-minute chart. Let's take it one step further. Let's say you didn't get that trade. And then we start to see the moves down. We always go back to the 1 hour first so you can see. So at this stage, we're starting to get those impulsive moves down. This starts to occur. And let's say you don't get that trade because you was waiting for it from the top. But what about this area here? We can see that we stall for 1, 2, 3, 4, and then we drop. Naturally, you're waiting for a correction to then drop to the downside. Not that visible on the 1 hour chart in that type of situation because the momentum sometimes kicks in too quickly. Now notice on the 15-minute chart, we have a minimum of 6 15-minute candles, and we have a very clear correction. So remember, early on in the move is where it's the higher probability to take these setups. And then what we're able to do, typical entry, this one's a reduced risk, 20 pip stop is absolutely fine. And then again to here is 1.7, and then it's very likely that you're still in the position for, again, just under 12%. So there's a difference here on 2 trades, over 10% already from the difference of actually not taking them. So that's 20% already. We haven't even got started. So that's those 2 positions. So first one, refining this 1 hour. Second one is a trade that wouldn't have even been visible on the 1 hour, but it is on the 15-minute. As you can see, very clear, same concept. Now we can take it one step further and look at this move. Let's say you're in the move, or this is the first time you're looking at this. You're looking at this correction. At this point, we had NFP. So when we're looking at this correction, it's important to be precise and tight with it. This is the type of trade that wick could have taken you out for a break even, and then it carried on to the downside and often lead in frustration at times. So what's the 15-minute chart going to do for you? Well, if we drop to the 15-minute chart, we can see that we can be more precise with our angle of flag. So we can tighten that up, and then we start to get more of a pennant continuation. The pattern becomes even clearer, and then we're able to enter on the break, giving us more of a cushion. So for a 20 pip stop, we can be above this correction. That's absolutely fine. This is the type of one that could actually go for a 15 pip stop, but let's be conservative in this type of situation. What's the benefit here? Well, as you can see, this goes now to the downside, but it gives us almost a 7 pip cushion from the spike. So yeah, just over 6 pips, 6 to 7 pips cushion from the spike. So not only do you stay in the trade, it's more precise, you have a better risk to reward, and you're not taking out for break even, and then you're currently running 5%. So you can see the difference on the whole way down. It's sometimes not getting the trade at all, or adding 12%, an extra 13%, an extra 5%. If it hits full target, of course, another 7%. It's crazy. It's a 30% plus move just by understanding the difference of the 1 hour chart to the 15-minute chart. It's crazy. And for me personally, I'm in from the top from here, and I'm in on this one here. Now, I know a lot of you actually capitalize on this trade and this trade, and I've been working closely with the coaches to get them up to speed, so they're implementing it as well, and they're going to be able to help you out with the 15-minute chart. And there's other people within the community that are starting to advance and improve their level of skill that will also be using it. And you're going to hear me talk about it a lot more, because I know that it's going to be crazy for our results. I can't wait for you all to start implementing this, but just approach it with caution. As you can see, it's the impulsive phase where the majority of the opportunities are. And sometimes when the momentum's happening, the reason why it happens is when there's a lot of momentum in, the market just sticks around for a couple of hours on the 1 hour chart. You're waiting for a correction that doesn't develop, and it keeps dropping. And then eventually you're only looking at it here, not realizing there was entry point 1 and point 2. So there's 2 entries before you even waited for the 1 hour. And if you got taken out for break even there, you see the whole move and it gets a bit frustrating. Well, I've got good news for you. This is going to be a game changer, and you're going to be able to precisely enter those trades. So as you can see just from that, that is why dollar CAD is so powerful when you're anticipating the impulsive leg. That's the key thing. Going back to that point, I'm only looking for the majority of these trades, 95% of the time, the impulsive leg, higher time frame structure. So have the checklist and make sure you're not just jumping to the 15-minute chart on any type of position. That's not going to serve you. Always understand what phase you're in. So that is dollar CAD. I hope you took a lot of notes on that. Let's take a look at some more positions. So here we have pound dollar. So this one's a little bit different because, like I said, always look for the high time frame structure. And when we're looking at this formation, we're anticipating that the impulsive side of the leg will be for this move to the upside here, right? So when we're looking at that, that's the main impulsive move that we can expect to start utilizing the 15-minute chart. But there's certain types of situations, if we just take price back a little bit here, there's certain type of situations that we can actually forecast and take advantage of it within the corrective phase. This is that one variable that I would say that would be worth it, but only when you have the skill set, only when you're used to utilizing the 15-minute chart, which is why I want you guys and girls to mainly focus on the impulsive phase. This is the variable, so you know how to deal with it if you do go to it, because of course I can't stop people utilizing it in the corrective phase, and sometimes it does work. So let's take a look. So on the daily chart here, we're forecasting this. It's still based on a high time frame structure move when you think about it, because we have touch 1, touch 2, and we're expecting this to come down for the 3rd touch and then go. But within this move, this could still be impulsive. So essentially, this correction here is still anticipating the impulsive move. But when I'm talking about the impulsive move, what I mainly mean is those bigger moves, not just the short-term impulsive moves. So that's the variation there. But let's go to the 1 hour chart firstly, so you can understand. When we go to the 1 hour chart, you can see that we have this particular structure. When we have this structure here, this ascending channel, we know this is all corrective. And at this stage, we're anticipating that we could come down for one more trade. Now, we previously had the trend line in like this, and then price started to move to the upside. So if we take price back to, let's say here, when we broke the trend line, so essentially we move up, one, like this. We're expecting this to then break out, but we need a continuation to confirm that, or we break back into the pattern, and then we start to break back in. So at this stage, we're getting that continuation pattern. So you notice how we get 1, 2, 3, 4, 5, 6, 7. Essentially, we do have enough on the 1 hour chart, but I can see why this could be confusing for somebody and why they would be a little bit put off and maybe think, you know what, I'll wait it out for a little bit and I'll wait. Let me explain how you can be more precise. If we then go to the 15-minute chart and actually have a look at what's going on there, let's take a look. So if we go to the 15-minute chart, now what do we see? These are the key characteristics that you want to look for. You can be more precise. Now you can actually see that this is an impulse down. This has 1, 2, essentially 3 sections. So we have the scoop there, we have a little double top, we have the arcing nature there. So you can see it's a clear flag, but you needed the 15-minute chart to filter it, because sometimes we're 1 hour away where we think, do you know what, I'm just going to wait a little bit longer, and then it drops, and then you don't take the trade. If you've been there, this is going to help out massively for you. So in this case, and this is being conservative, 40 pip stop, you likely would have been taken out on here on the 1 hour chart. I'll show you. So on the 1 hour chart, you would have likely been taken out after this started to retrace. So you can see there's easily a 4 to 5%, let's say 4.7% within that position. That's a trade that you probably wouldn't have even taken. That's the difference of you utilizing the 15-minute chart. Dollar CAD, pound dollar. Sometimes these are trades you haven't taken any yet, or you're up 25, 30%. Can you see how now that consistency really is in your wins and not your losses? Why I've been saying it over and over for months and months is because it doesn't matter. Losses are inevitable. I will take a loss. Every great trader will take a loss. But our ability to precisely enter these positions, that is what is going to be a game changer. And for those of you that set profit targets, you might have even got out for a little bit more. But let's say 4 to 5% that would have added to a trade that on the 1 hour, likely you would have waited for a little bit more before taking the trade. So that's pound dollar. Keep that simple, and that's the only variable that I would say when looking at the high time frame structure that would support these kind of trades. In the future, I'd be focusing mainly on the impulsive phase on a bigger degree rather than just these short-term ones. But if you do see something like this, that is valid because it is a correction, and that's how I would utilize it. I'm not looking for extra positions as such in that phase. I'm more so just looking to refine short-term entries utilizing the 15-minute filter. Let's take a look at some more positions. So here we have Euro CAD. So here on the daily chart, really important to understand the high time frame structure again. So looking for sell setups at the top. What do we have? We have the bigger double top formation. We've known for a while that this structure may go up a little bit more, and the line in the sand would be, if it breaks above here, we want to see either continuation to confirm the move up, or this is coming down for one more trade to touch the structure low before it then moves to the upside. And we know that this move could be impulsive. So high time frame structure, looking at that impulsive leg. When we go to the 1 hour chart, let's take a look. So on the 1 hour chart here, you can see this is where the double top is. Let's delete this. So this is where the double top is. And we also have this 1, 2, as you can see, if I just get this point here, it doesn't connect exactly, but you can see 1, 2, 3 type structure, 3 significant points. And then we have this ascending nature here. This also has an element of a head and shoulders type filter right at the top as well. So we know it's broken the high as the double top is around this area here. So we broke the high, getting people caught on the wrong side of the pattern. We have the high time frame structures to support it. And then sometimes here on the 1 hour, you can see there's risk entries at this triple top, but sometimes you're waiting for too much and you're not taking them. Well, the 15-minute chart in this situation would help you refine that. So 15-minute chart, let's take a look. So when we drop down to that lower degree, what can we see that would help us? Well, it gives us a bit more clarity in terms of that head and shoulders that I was talking about. You can see that overall move, head, shoulder, shoulder. So we've got the shoulder, left shoulder, right shoulder, and the head there. And it's more about this type of channel here. Notice within here, you can start to see this as a clear ascending channel. What does that do? On the 1 hour chart, you may wait too long and then the stop is too big and you don't get in the trade. In the 15-minute chart, you can see we have a mini double top within there, and we have that scoop, that arc formation. What that does is it gives you the clarity and the confidence to precisely enter as a risk entry at the top of the structure. So how would I get into a trade like this? I'd be entering right at the top 2 entries, either from here as a risk entry after that 15-minute candle closes. Naturally, we're getting in with a tight stop. This would probably be a 20 pip. And by the time you got out, it would have likely been around this area because it's unlikely you will hold that deeper pullback. So even from here to here, you can see is 9.6. Worst case scenario, you get in slightly later and you waited for that next 15-minute candle to close, which is fine. Then you've got a 30 pip stop, or 32, 35. You can see anywhere between 5 to 6%. Bearing in mind this is an added position that you might not take because you're waiting for something more, not realizing that it's the higher time frame structure that is going to collapse this move to the downside. But what's going to help you is the 15-minute to refine that. So again, an extra 5 to 6%. And if you did hold through the pullback, then you'd be in even more. But it's likely with that management, being aggressive with the management is fine. If you've got a more relaxed management, then of course you'd still be in the trade. But in this type of situation, an extra 5 to 6% just by refining that on the 15-minute chart, what difference would that do to your performance? Is that the difference of whether you're a break-even trader and +6, +5? Is that the difference between you being -2 or +4? So you see the difference of adding these small little 1% tweaks with the 15-minute? It's crazy what it can do, but I want to show you more examples. So the last few examples, so you understand exactly how to utilize this in your trading, is on Euro Aussie. So this starts with a higher time frame structure again with the bigger pattern. Knowing this big expanding here on the daily, what do we have? We have our 1, 2, 3. We have the spike up there. We have our 1, 2. And at this point, we're expecting this move to the downside to be the impulsive leg, the impulsive phase. And you can see we're just starting to get momentum. So this is one we can definitely capitalize on. So when we go to the 1 hour first, we can take a look up here. Notice how this is something where you can refine your entry at the top here. So for those of you that took this, very well done. And you can see how this impulse is up, 50% retracement. It completely retraces that by around 50%. And then you've got this reversal type formation. So impulse, correction. And now you've got the continuation within here. So the bigger move is a bigger reversal. And then what you have here is impulse, correction, continuation. Now at this point, would you take this position? Now I can see how some people might hold back a little bit, wait a little bit longer. What does the 15-minute chart do for us in this type of situation? Well, we go to the 15-minute chart. Let's take a look. On the 15-minute chart, it now goes from just a continuation to a type of pennant. As you can see, it's got that kind of pennant feel to it, which means our risk to reward is greatly increased because we only need our stop just above this squeeze. So when we put our entry on in the 15-minute chart, we know we've got way more than 6 15-minute candles here. This is a nicely formed one. This is not so much a 15-minute flag. This is a 1 hour flag, but it's been refined on the 15-minute chart. Safe side would be above there, but you don't need to be. It only literally needs to be above this part here. So around a 35 pip stop is fine. And you likely would have stayed in this trade at least down to this area here, maybe still even in the position. So either running around 10%, or even if you got out just as your first target for 6% there. So nice little trade. And as you can see, when we get moves like this where it completely impulses up and then it retraces 50% or plus of the move, this is getting people caught on the wrong side. And we had a high time frame structure pattern to support that. But even if you didn't get this trade, there was a trade here to get, right? That's harder to see, that one. Even if you didn't get that trade, this one is very clear. So you can see the flat correction, just a tight flag, and then you're getting in like this with about a 30 pip stop. You'd be running in that position now for 6.7, so nearly just under 7%. Let's say you didn't get that trade either, and for whatever reason, time zone, etc., then you've got the hover. The hover is on the trend line. If I go to the 1 hour chart, you can see it's just sticking around for 1, 2, 3. This would be where you'd forecast potentially something like this. You would go to the 1 hour chart and you'd get your forecasting tool and you'd expect potentially 6 to 8 hours, right? Like this, and then a drop. And that would be the hover. But sometimes what happens when the market has tons of momentum, it doesn't wait around, which is where we can utilize the 15-minute chart. So we go to the 15-minute chart and we can see, well, there's a hover there. We've got 6 to 8 15-minute candles, 6 as a minimum. And then we put our stop just above 35. So worst case scenario, you're still in 5%. So you see it starts to then become very difficult to not capitalize on these moves, especially when they're in the impulsive phase. They're very, very reliable, guys and girls. And I know this is going to be the difference whether people are struggling. For those of you guys and girls that are struggling, you're going to refine this. And this can be the difference whether you start to become very, very consistent and hit these returns. But it's important to not go overboard and start taking 10 trades a day, 5 trades a day, anything like that. For those of you guys and girls that, of course, are already consistent within Falcon using the 1 hour chart, then this is going to just boost your results like crazy. For those of you that have just started, all you need to do right now is get stuck into the content, get up to a level, and really understand how we look at the markets, the structure, and then the 15-minute chart is going to be there for you, and then it's going to refine that process, and it's going to be a complete game changer. So guys and girls, I really hope you've enjoyed this and you've seen the power of what this can do. I've been so excited to share this. It's been crazy for me. It's added in total, bearing in mind it's tested capital, it's still real money, but it's added over 100% for the year, which is just nuts. Now going into that full 1% capital, I'm really excited for the year ahead, as I know this is just going to be crazy growth, crazy results, and I want to share this with you guys and girls in the community. As I'm sure you can appreciate, I always like to do a lot of testing before I just chuck something out there. That's not my style. I want to make sure it's tested. We've trialed it and it works very well. So guys and girls, make sure that you dig in and you watch this episode over and over. And as some actionable steps, what I recommend that you do is you backtest 3 months of data on the 15-minute chart so you can see that. Test out 3 to 5 positions on demo or a reduced percentage. Like I said, maybe use 0.25%. If you don't want to go to demo, you can just use 0.25% of your account until you're confident and you understand how to utilize it. And make sure that you've been in Falcon for at least 3 months. You understand the content, you actually understand how we trade before you do jump to the 15-minute chart. Remembering that you can get all of your trades on the 1 hour alone. We've done this for over 2 years within the community, and I've been doing it for a lot longer. But this, without a shadow of a doubt, is the evolution of the Falcon strategy. And I wanted that at least a year before releasing it, as I'm very thorough with my testing, and I want to make sure that I'm always teachable. Remaining dedicated to being open to learning new things is very important to me, and remaining teachable and always improving as a person as well as a trader. And that's why I know that myself, I'm always going to improve and I'm never going to get complacent. And I want you guys and girls to really take that on board. You never want to become the person of a know-it-all. You want to be open, so then you can be open to these opportunities and these rewards, and you can continue to grow. And that's why I know myself and you guys and girls are going to just reach new levels month after month, year after year.